Quick look at the market action here this morning. You take a look at what's been going on, and of course, it is seeing a decent rally when it comes to risk assets here today. You got to thank what we heard in those GDP numbers in the U.S., which were revised lower, so suggesting maybe we could put some rate cuts back on the table for this year. All our eyes are watching that PCE inflation gauge on Friday now, and whether that changes the narrative in any way here today. Still expected, though, that PCE print to slow, possibly one of the biggest or slowest prints we've seen all year round. But we're watching very closely what bonds are doing. They were a bit up leading up to that, and we're talking about a 4.91 for the U.S. 2-year yield. The 10-year is just hovering around 4.5%. You're seeing that filter through across some of these sovereign bond markets here today, with the Aussie 10-year yield down some 3 basis points. JGBs are still unchanged, but hovering around that 106 level here this morning. Dollar yen's trading at 156, just below that 157 level here. But we did get that Tokyo CPI print, which did show inflation picking up. Core inflation at 1.9%. That does keep the BOJ on track, possibly for a rate hike in just a few months or so. But equity markets are liking it at the moment. You take a look at what's going on. Seeing some gains across Taiwan, just opening up there at up 0.6%. Japan and Korea all seeing some gains here this morning. We're watching crude markets, though. Quite a bit of a slip overnight when it comes to Brent as well as WTI. It looks like things are looking a bit lower here, leading up to that OPEC Plus meeting on Sunday as well. We're flat when it comes to iron ore, but we're watching very closely also what goes on in China. So we have those PMI numbers coming up at the bottom of this hour. You take a look at what the Golden Dragon did overnight, and still seeing quite a bit of bullish momentum heading into the end of the week. We're seeing gains of 1% yesterday. This is what the setup is looking like. The approach to the open. We talk about the PMI data. We're talking about these month-end superlatives too. So we're seeing the HSI, at least Hong Kong stocks, set for I believe a third week of losses, second or third. And we're still talking about MSCI China that is close to seeing 4 months of gains here. So certainly that's what we're watching out for. There you go. Second weekly loss for Hong Kong. Futures are pointing up this morning at 725.23. Watching very closely that dollar drop. Not really doing too much for the currency here this morning, but that fix could be quite important. And HS Tech, we got close, but we're still near a correction. We'll talk about the property sector a little bit later on. They saw a bit of a roiling yesterday on those stocks as well. In terms of the agenda here today, we talk about the geopolitics. So yes, we're going to talk about Trump in a second, but certainly the Shangri-La dialogue that's happening in Singapore and kicking off here today. We talk about the PMI data, China stocks. We talk about the second week of losses there. And month-end flows, basically. Maybe we're seeing a little bit more rebalancing after this rally. We'll see how that plays out. And of course, that renminbi fix, Hong Kong retail sales, all on tap here this morning. I want to bring in our Chief New Asia correspondent, Stephen Engle, now. He's going to be here with me for the next 2 hours. What are you watching here today? It is about Trump, really. Yeah,
there's no bigger story that we all woke up to this, obviously. And again, everybody's asking what are going to be the political ramifications. And Wendy Benjaminson will be joining us shortly and give us all those ramifications in detail. But everyone that I got all of my messages overnight when this broke, what does this mean for Trump? Yes, he can still run for president. That's the bottom line. Will he appeal? They've signaled that they will. But there will be sentencing on July 11th. And then there could be an appeal. He could eventually appeal, obviously, eventually to the Supreme Court. But again, the political ramifications in a very tight race, just a little more than 5 months until the November 5th election. What about those swing states? Does this move the dial in Pennsylvania, in Michigan, in Georgia, in North Carolina, in Nevada, in Wisconsin, in Arizona? Big questions.
Yeah, it's very interesting, too, about how quick this verdict came through. I think people were expecting maybe it could have gone for hours, hung jury maybe, and then we got this sort of unanimous sort of verdict. And it's interesting just what was going on in that courtroom as well. Let's get a little bit more context here and bring in, of course, really what's the latest here. We talked about that sentencing. We have our senior editor, Wendy Benjaminson, joining us now from D.C. with the latest. Obviously, it was a fascinating trial, Wendy, but overall, how does this really hurt, if anything, Trump politically?
Well, I'm not sure it does hurt him politically. People's views of this race are so baked in. You're in one camp or you're in the other, or you believe a pox on both their houses and you will stay home. But people's opinions are really settled on this case. And so I think that there may be a few voters, few Republicans who are swayed that they just can't put a convicted felon in office. And there are so many more, at least the official line is that, Donald Trump was wronged and we should vote him into office so that he can bring back, what the kind of America he envisions. But our polling, our Bloomberg News Morning Consult poll, has shown that when we asked people if they would vote for Trump if he were a convicted felon, only 17% of people who are inclined to vote for Trump in November would take a step and think about whether they really wanted to vote for him again if he were convicted of a crime. We asked that several months ago. So we'll see if his demeanor, if anything about this trial changed it. I will say 17% at a close race could make a difference.
Yeah, and we did hear from Trump shortly after this verdict, and I want to kind of let our viewers kind of take a listen to what he had to say.
This was a disgrace. This was a rigged trial by a conflicted judge who was corrupt. It's a rigged trial, a disgrace. They wouldn't give us a venue change. We were at 5% or 6% in this district, in this area. This was a rigged, disgraceful trial. The real verdict is going to be November 5th by the people.
So he's saying, Wendy, that obviously the real trial will be, November 5th with the people voting in the election. Essentially, do we have any indication, though, what the judge, what kind of sentencing the judge might give? I know each count, 34 counts, he can get between 1 1/3 to 4 years for each count. I mean, that could be a long prison sentence, or it could be a probational period, or it could be a sequential, or, running concurrently, all 34 counts. So what do you think is the likely outcome?
Well, I think what we've heard is that 4 years would be the maximum sentence that he could get, that a judge would put all these together. However, it's highly unlikely that a former president of the United States is actually going to go to prison. First, there is the logistics of it. A Secret Service unit would have to be with him 24 hours a day. That's hard to manage in a state prison. There's also the politically disruptive effect I think it would have in this country to have a former president sitting in prison. Much more likely, and also given first conviction, he's a 77-year-old man. So all of that is going to factor into the judge's thinking. And much more likely is something like probation or house arrest, or something where his movements are limited, his internet access is limited. And I don't know if that will happen before the election, but it might. I mean, the sentencing hearing is July 11th. They could delay it until after the election, or they could do it right away. July 11th, however, is 4 days before the start of the Republican National Convention, at which he will be formally nominated as the Republicans' choice for president.
Yep, it's going to get very interesting. Wendy, thank you so much for staying up with us. I know it's getting late over in D.C. Wendy Benjamin's in there, our senior editor, on the latest on the Trump trial. Of course, you can get turned to your Bloomberg for more on this. T-Live Go is up and running for plenty of commentary analysis from our expert editors here today. So that certainly is our top story. And we're watching very closely other things across these markets as well. Investors are looking ahead to the release of the Fed's favorite price gauge for more clues on the path for interest rates. Let's bring in our executive editor for Asia markets, Paul Dobson, also our Bloomberg Economics chief economist, Tom Orlik, who's back here in the region. Tom, it's great to have you. I'll start with you, Tom. Everyone's watching this PCE inflation gauge. What are you looking for in particular today?
So it's a really interesting moment for the U.S. economy, Yvonne. On the one hand, we finally have signs that momentum is slowing. That was the message from the second print of the first quarter GDP data that we just got. And that showed growth in the first quarter was just 1.3%, not 1.6%, as the first print had suggested. Now, that slowdown should be good news for the Fed. It should be disinflationary. And indeed, we are expecting, the consensus is expecting the core PCE gauge to slow to 0.2% in data out later today in the US, from 0.3% in the previous month, a move in the right direction. The challenge for the Fed, though, is that there's a bunch of lagging elements in the PCE, things like property insurance, things like auto insurance, health insurance, service sector items like fast food, where there's a lot of minimum wage workers. And these components are still playing catch up from the last bout of inflation. And what that means, we think, is that even as inflation comes down a little bit over the summer, there's still going to be forces pushing it up again into year end. And that means the Fed is still going to be facing some challenges getting price changes back down to their 2% target.
Yeah, Paul, maybe chime in here on how markets are likely going to react. If things are likely going to slow down, as Tom mentioned, and this whole disinflation trend resumes itself in some way, might that be pretty favorable for risk assets? What do you take of it?
Yeah, markets would almost certainly welcome such a outcome. I think probably that, given that's the expectation, disappointment might be the more powerful market mover in terms of reaction. So disappointment, another higher than expected inflation print, and you're going to see higher yields again, and probably some drag on equities as well. This month has been pretty interesting because earlier in the month we saw quite a drop in bond yields in the US on expectations that inflation is cooling and that the Fed is going to be able to start to get towards those interest rate cuts by the end of the year. But we've had another flip-flop in market pricing and expectations. Towards the back end of the month, bonds sold off again. We pushed those 2-year yields back up towards 5%. And it sets us up very nicely for today's data point because there's quite a lot of nerves out there, but also quite a lot of that two-way risk. So if we do get the numbers in line with Tom's forecast and market expectations for signs of slowdown, then the market will take some comfort in that, at least in the short term. If there is a disappointingly high number, then that could cause some pretty large amount of volatility into the end of the trading week.
So, Tom, this is Steve Engle here. Great to see you. Let's pivot to China and talk about the PMI numbers that we're going to get today. The consensus is for expansionary territory, 50.5 or thereabouts. But this is, would be only the third consecutive month in expansion territory after 10 of 11 months below 50. Obviously, the government is trying to pump up manufacturing and the industrial base. How do you read these numbers as sustainable or not?
So PMI data are coming, I think, just in about half an hour, and expectations, as you say, Steve, for another month of modest expansion. The manufacturing gauge expected to come in just a shade above the 50 mark that separates expansion from contraction. The services and construction gauge a shade higher again. So not terrible news for the Chinese economy, but not great news either. The big picture remains that property is a huge drag on China. There was some excitement in the markets in recent weeks about a new government scheme to flex its balance sheet, perhaps flex the PBOC's balance sheet to buy up some of the inventory of unsold property. I think what we're now seeing is the market coming to the realization that actually the stock of unsold property, the inventory, is just so vast that even some of the big numbers, a trillion yuan, that are being floated for this purchasing scheme just aren't going to be big enough to really move the dial.
Yeah, Tom, it's a good point that you mentioned the market reaction to Paul. Paul, you can chime in and maybe talk about this, right? Because you take a look at HS Tech, you take a look at some of these property stocks, and they're basically in correction territory right now. The market seems to be fading in terms of the optimism around some of these stimulus measures already.
Definitely. And I think I'd like to draw your attention to something that's pretty buzzy this morning that's going on, where once again there's some interrogation in the market about the possibility that the PBOC will take interventionist measures by selling bonds into the market in order to push up yields. It's fed up with the fact that long-term yields are so low, so depressed, that people are taking their money out of their bank savings accounts where they're getting very low interest, but all they're doing with it is putting it into the next safest asset, those long-term bonds. It would rather people are are putting their money to use, going and spending it on property to revive that market, or putting it into equities and the such like. And so, the rhetoric around that is getting higher. But, the problem is those economic expectations, right? The idea that inflation is going to stay low, depressed for longer, the idea that the property market is going to stay depressed as well. Without turning those around, it seems to me that, it's going to be a big challenge to get people to expect that bond yields should be going higher and to price in a more favorable economic outcome into China's financial markets.
Paul Dobson, thank you, our executive editor for Asia Markets, joining us from Singapore. Also, our thanks to Bloomberg Economics' Tom Orlik, joining us out of Tokyo this morning. Your renminbi fix is crossing through your Bloomberg here right now, and it's interesting. You're watching. It's a bit of a stronger one today, 710.88. So it's been a while we've seen one that is actually sub 711 in about 3 days or so. So, that certainly is reflecting maybe the dollar weakness that we have seen of late here. So maybe PBOC reflecting that here this morning. We got plenty more ahead. This is Bloomberg. Well, tensions between the U.S. and China are set to take center stage at this year's Shangri-La dialogue in Singapore. The summit brings together global defense ministers and hundreds of delegates to address regional and international security challenges. Let's cross over to the summit now. Our Bloomberg Markets Asia anchor, Heslinda Ahmed, is joining us and has, of course, this is one of the first times the international community is going to actually, I guess, meet and hear about this new defense minister in China, Mr. Dong Jun. Also, there's been talks that they are set to meet his counterpart in the U.S. What's in store?
Well, a lot is in store and a lot is at stake. Remember, relations have taken a turn. And when it comes to military relations, they resumed only about a year ago. Things were derailed by Nancy Pelosi's visit to Taiwan. That got China up in arms and pushed back on relations, military relations included, as a result of that. So a lot at stake. All eyes on that meeting poised to happen at 1 p.m. today. That handshake within the two defense chiefs. We have Lloyd Austin of the U.S. as well as Dong Jun of China. They are meeting in person, face to face for the first time. Now, there are lots of issues, of course, in terms of trying to sort out relations between the two sides. We've seen a China that's been pretty aggressive, especially in the South China Sea. And, when the two big elephants fight, it is the smaller nations that suffer. And to that end, we heard from New Zealand's defense minister earlier talking about how she's had to navigate, to juggle the relations between the two sides. Take a listen.
I think we are doing a very good job of working with China and with our traditional security partners as well. It's just simply one of those things that as a small nation, we have to be dexterous, but we should never be naive.
This is a China that's pushing for a multipolar world, a world where there are more than just one power center, i.e. more than just the U.S. Of course, it says that a rules-based international organization that the U.S. is pushing for, the rules are based on the U.S. itself, and whether they observe or ignore those rules depend on the U.S.
Well, Heslinda, obviously there's going to be a keynote from the Philippines President Marcos, who has aligned himself on the South China Sea issues and others with the United States. He's pushed back against Beijing. What kind of tone do you expect from President Marcos there in Singapore?
Well, we have been hearing this particular tone from President Marcos. He's been pushing back again and again against an aggressive China. Remember, the two sides have clashed in the South China Sea, but it is a balancing act yet again for a country like the Philippines. Steve, you know how aggressive the Chinese have been, but it is an important trading partner as well. So Marcos has said time and again that he's trying to get relations back on an even keel. He's not wanting to poke the bear. That was the expression he used in an interview with me earlier this year. So it is a difficult one, but having to navigate an aggressive China is going to be very complicated for the Philippines.
All right, thank you, Hazlina Ahmed, there, Bloomberg Markets Asia anchor at covering the Shangri-La dialogue this weekend as well. I take a look when it comes to how things are set up here. The pre-market in Hong Kong, we're actually seeing quite a decent rally here. We're up about 1%, and A50 futures are still punching a bit higher here this morning. We're back below 724 levels on the currency, and 232. It's interesting that we're seeing yields pick up just by about 1 basis point here, with Paul Dobson mentioning that PBOC line from the local media saying that 10-year government bond yield is relatively low right now. We got plenty more ahead. This is Bloomberg. All right, we're just about 5 minutes away, less than 5 minutes into that PMI data to come through here, and you're seeing quite a decent pre-market rally here that's going on in Hong Kong. Take a look at that. Hang Seng's up some 1%. HS Tech, we're up 1.6%. So if we continue at this pace, looks like we could be set to not get into that correction territory, but certainly we're heading into some bearish milestones, right? We talk about tech, we talk about property, and basically we're seeing both of those sectors are basically seeing these declines. Is this a sign that maybe these were just sort of a tactical sort of trade on cheap valuations, more so than really a re-rating? There's still concerns over earnings and really disappointment over the government stimulus as well. We're watching also EV stocks here. They seem to be flying a little bit here. There's a Reuters report that moved the Tesla stock, talking about the automaker preparing to register its FSD software in China. You're welcome back. You're watching the China Show. We're counting down the open of markets, and that PMI number could come out any second now. So we're looking to see if we see continued expansion when it comes to manufacturing side of things. Equity markets, though, are continuing this rally here today after what has been, a few weeks or so of really investor sentiment that has declined sharply. We have an interesting note from Morgan Stanley just talking about what's really driving this, and it's really the offshore market weakness. They say, Laura Wang, her team, saying that the recent military exercises may have also triggered some geopolitical uncertainty as well. So certainly we're seeing, at least today, things are looking a little bit better after that profit taking that we've seen for the last 2 weeks or so. HSI, we're still set for about 2 weeks of losses here, but overall MSCI China has been seeing about 4 months of gains overall. But you take a look at how the open is looking like. It's still looking to be a pretty happy Friday if you're long these markets as well. You take a look at what we're seeing here. CSI 300, we're up about just a 10th of 1%. So it's been pretty slow going on the onshore market here. And so far we're watching that renminbi very closely. Just given what we saw, the dollar drop overnight on the back of some of these softer numbers in GDP in the U.S. You look at the yields when it comes to CGBs. It's interesting that PBOC commentary on local newspapers saying that it's the yield's relatively low if you're talking about growth of about 5%. We have that PMI data crossing your Bloomberg here right now, and there you have it. Ooh. Yeah. 49.5, Steve. Yeah. We were expecting something expansion. Yeah, so the rally in manufacturing PMI, the official numbers, only lasted a couple of months because you had above 50 for the last 2 months, after 10 out of 11 months in contraction territory below 50. So we've gone back there now. Is it losing momentum? Yeah, that certainly is the big question. Non-manufacturing also, that was in line, though. We're still seeing expansion of 51.1, but also seeing a slight slowdown from the previous month as well. But it certainly is going to be interesting to see what's driving this manufacturing number to head south. Let's bring in that question to Hsiao Jiazhi, Chief China Economist at Credit Agricole. What do you make of this number, 49.5?
Yeah, I think indeed it's quite disappointing. I think definitely is to the very low end of the forecast string. I think it does pose the question whether, the continued improvement in terms of the China sentiment, whether it's going to be sustained. I think after the initial very significant equity market rally that we have seen in the past months, people need to see more of the data evidence, whether China's macro fundamentals are indeed turning around, and the PMI definitely is not that helping. I would say that I think initially in the past few months, manufacturing PMI has certainly had the support from external export orders, and I think export growth has been quite okay, right, so far in the year, and also the manufacturing policies has been quite helpful in terms of manufacturing investment in the past. But I think as more of the concerns coming through, as there are more and more news about trade tariffs and protectionism, not just from U.S. but from Europe and even some other emerging markets, I think this is kind of really definitely weighing on the sentiment among the manufacturing managers, and I also think seasonality adjustment could also be a little bit of issue that makes the data a little bit messy.
Not to call you out, but you were expecting 50.6, so it's quite a miss. And you were above the consensus, which is 50.5. Does this really reflect maybe the concern that there is overcapacity in manufacturing? Obviously, there's priorities in the new three, in EVs, in batteries, in solar. But other industries, we're hearing there's massive overcapacity. Is this an indication of that?
I would not call it like massive overcapacity, but if China's demand is like kind of still softish, is not being able to pick up no space in terms of expansion in manufacturing, some of the other trading partners would definitely feel the pressure from China. Even though the new industries, say EV, solar, and batteries, as a whole, they count less than 5% of China's exports. But I think people are more worried about the long-term perspective. If China's domestic demand fail to really pick up, responding to all these policy easing measures we have seen, that definitely this is some spillover the other trading partners need to take a look at.
So if you look at the investment into the big three, the new commodities of late, I mean, are we likely to see more investment into just those three, or is it becoming something that can spread to more traditional sort of industries as well? Or is that a bit of a tough sell to really switch to more sort of the clean tech initiatives for steel, for example?
Yeah, I think in general, I think China is still looking at the ways how to, secure long-term productivity gain, and this kind of green economy definitely a very important part of that. But beyond that, there has been also the pledges to support various industries that also including manufacturing, for example, high value-added automation, digitalization, and so on and so forth. I think those would continue to receive policy tailwind. But I think beyond that, right? So China still have a lot to work on. For example, in the service sectors, I think those areas definitely has room for further deepening of the reforms, and that could also help with, say, the unemployment and the labor market as well.
What is your read on the efforts and the stimulus measures that have come for property? That's the elephant in the room. The property sector needs rescuing in many ways. And we've seen this week already Shanghai, Shenzhen, Guangzhou, and Tianjin, among other cities, relaxing and removing those first-time homebuyer restrictions. That's one side of the policy, but also this buying up of excess inventories. And now we're hearing about a massive loan being arranged by state banks, ICBC, to the tune of nearly $7 billion US dollars, and it's happening quickly. Does that tell you how urgent this is for policymakers?
I think this is definitely encouraging to the markets that, we just had this very disappointing manufacturing PMI. So definitely it's going to be quite encouraging that China is indeed showing its willingness and a bit of more urgency to deal with this property market mess. I think so far, if we look at the policy signals, I think they are on the right track to rescue this property market slump, I would say. I think those home purchase restriction relaxations and also the ease of mortgage standard cut of mortgage rates is likely to help to drive some of the return from the private demand in terms of home purchases. But I think beyond that, destocking, optimizing the home supply, as well as speed up of those unfinished projects, that would also be very important. I think the policy easing package will have to be quite comprehensive because the situation is quite, still
what would we consider comprehensive enough in terms of the fiscal resources and the money that's needed to maybe soak up some of this inventory? Have you put a number on it yet?
I think this, for example, the PBOC relending package of RMB 300 billion, and on top of that, there is also PSL of 500 billion. I think this is at the first steps. I think that is welcome. But beyond that, I'm not that certain the response from the household and the fiscal resources of the local government and with this package of less than 1 trillion would be enough. I would say eventually in the next few months, if we are not seeing sustained improvement for a few months, then I think central government will have to provide even more.
Right.
I think, for example, through policy banks, definitely there's room, and also PBOC, right? So PBOC, you have a lot to talk about PBOC's balance sheet. It has definitely not been expanded so much over the past few years. Even we are seeing this, continued question about China's growth.
There is room, and of course, the central government is leaning on state-owned enterprises and state banks. That big loan I was talking about was for Vanke, which is the second biggest developer and state-owned. So there's some vulnerability there, obviously. But ICBC has to take that implicit guarantee as well to their depositors very seriously. But I want to pivot forward to the third plenum, which has been long delayed. It's going to be in July. Those are going to be laying out the economic priorities. What do you expect policy-wise on property, but also will there be a mention, as she made very emphatically this week, about youth unemployment, which had been up to towards 20%. It's now 14.7%. Still not acceptable, I'm sure.
I think third plenum, and I think the latest Politburo statement and also the speech by President Xi have given us some clue is likely around deepening of reforms to support Chinese-style modernization. So I think this is third plenum is going to give a lot of top-down guidelines, but I think a lot of areas will likely to be touched. But I think more relevant to the market is how this top-down policy guidelines could be implemented and executed at the government levels, and how this would plan out. I think property, I expect there could be some very broad mentioning, and also about improving the people's livelihood, and also youth employment is a very important part of that, will likely to be mentioned. But I think more specifically about using unemployment, I think definitely there has been cyclical headwinds that need to be continue to be addressed. More importantly, I think there is also a structural mismatch in terms of the supply and demand. What kind of youth laborers will be able to find their suitable jobs? So I think from education system levels and also, some of the market reforms, especially related to services other than manufacturing expansion, would be very important to address this problem from a more longer-term perspective.
Hsiao, thank you so much. Credit Agricole Chief China Economist joining us here. We're checking some other movers here at the onset of this open here, and obviously this disappointing data coming through from manufacturing PMI, not really doing much in terms of denting the optimism around the EV space. Look at that. NIO's up some 10%. There was that Reuters report we talked about of them, of Tesla registering FSD software in China in the form of what looks to be maybe some sort of subscription-based sort of model here. So that's helping to really lift up the sector here. Dongfeng Motor also talked about a buyback of shares here this morning. You take a look when it comes to developers, they got a bit of a whacking yesterday, just in the midst of all this kind of sell-off and all the like here. We're seeing a little bit of more optimism, I guess. It's a mixed picture overall, but China Vanke, as Steve mentioned, getting that big loan, that certainly didn't really lift the stock too much in the A shares. The A shares not really reacting too positively either, but certainly one to watch. We'll have more of that with our credit team in just a bit. But the developers doing a little bit better here today. And there is a trading debut that we had talked about. Auto Streets Development here in Hong Kong. They operate an unused vehicle transaction service provider. So there you go. A pop in the shares of 45% on the first day there, raising almost 91 million Hong Kong dollars there. Plenty more ahead. This is Bloomberg. All right, we are continuing to see this rally gain momentum here once again. So the last 2 weeks have been pretty sour when it comes to sentiment, but today we are seeing quite a bit of risk appetite across these markets there, particularly when it comes to some of these offshore markets. Hang Seng is at 1.5%, HS Tech, there you go, 2% gains right now. Really trying not to get into that correction territory here when it comes to some of these large caps here today. You got to wonder what's driving it. That Chinese PMI data did not really lift moods in any way, especially when it comes to, we're seeing now contraction in the manufacturing floors for May. So it's interesting what's going on today. We'll figure it out. Another good news, though, we've been tracking, of course, this Bloomberg scoop. Developer China Vanke is in advanced talks with major banks for a loan of about $6.9 billion. For more, let's bring in our bond and loan reporter, Loretta Chen, on, what else have you learned?
Well, the size of the loan is pretty impressive, right? Yeah. $6.9 billion. It's a record for the Asian Pacific loan market. But we have to note that this loan has been in talks since March. So it takes really months for Vanke to get into that advanced stage with banks. And you can clearly see that difference, for Chinese banks policy lending for the SOEs versus for someone like Vanke, right? It has to pledge all these assets. So Vanke is actually giving banks 90 billion yuan worth of assets for them to choose from, and banks are still in the process of picking what assets they're going to use to back the loans.
And how much value do those sinking assets have as collateral, right? That's the big question. But does this put an excess burden on ICBC and the other state banks it's a policy directive, essentially, to help arrange this loan of $7 billion?
Yeah, I'm sure there's a lot of commercial consideration they have to put into account, like what you said, the sinking values of the asset, which would eventually affect how much loans they're able to give if they want to create more buffer room for that drop in valuation. And there's another Bloomberg feature story telling us today that there's 60 million homes in China that are waiting to be sold. And in order to sell them, these developers cannot build anything new, and they will take around 5 years to actually clear all these inventory.
Yeah.
All right, Loretta, thank you. Loretta Chen there, our bond and loan reporter. We've been tracking, of course, this story when it comes to Vanke as well. Let's get to some reads here right now. Other corporate stories that we're following. TikTok is pushing back at a Reuters report that says the social media platform is working on a clone of the app's recommendation algorithm for U.S. users. The article says the end result may be a version that operates independently of Chinese parent ByteDance. In March, the U.S. Congress passed a bill requiring a sale or ban of TikTok's U.S. operations. Calling the report misleading, TikTok says the divestiture required by Washington is not commercially nor legally possible. Apple is said to be planning to overhaul its Siri virtual assistant with more advanced artificial intelligence. Sources say the new system will allow Siri to take command of all the features within apps for the first time, with a revamp using large language models. Apple is set to unveil its AI strategy next month at its developers conference. And Bloomberg's been told that U.S. officials are slowing the issuing of licenses to chip makers such as NVIDIA and AMD for large-scale AI accelerator shipments to the Middle East. This comes as officials conduct a national security review of AI development in the region. And sources say they're particularly focused on high-volume sales, and it's not known how long the review could take. And speaking of NVIDIA, guess who's in town? in Taipei. Jensen Huang, we've been talking about this, right? This big trip that he's had. He's going to be heading into the, of course, Computex. This is the big AI tech fest. You've been there many times.
Many times.
That's happening on Sunday. We've also heard from Hon Hai's chairman, Yong Liu, has met with the NVIDIA CEO. I mean, I think all these sort of Taiwanese tech CEOs are lining up right now to really meet with the godfather of AI.
AI was a big magnet at Computex last year. It's even more so, and the organizers are calling it explosive and really a massive magnet, because we have also the heads. Jensen Huang in his leather jacket will be there. He'll be giving a speech, I believe, on Sunday. Also, we have the heads and CEOs of Intel, AMD, Qualcomm, and ARM Holdings, among many others who are going there. It just shows the importance that Taiwan plays in the high-tech and AI accelerator, race, if you will, where the H100 accelerator from NVIDIA is kind of the game changer and the leader right now. But again, there's all kinds of moves, perhaps for some of TSMC's manufacturing to go to Kumamoto in Japan, to go to Arizona. But again, the organizers and lawmakers in Taiwan are saying we're still going to be the center of the
look
IC
at the
world
local
here.
media. It's just a parade, really.
He's a rock star. Look at him.
Everywhere he goes, whether it's for dinner or wherever. There's that leather jacket. I'm sure he's sweating in it, just being how hot Taipei is right now. But yes, it's a whole frenzy, really, in Taiwan this week. And of course, he is from Tainan, so certainly one of their very own. So certainly, there you go. That's all that's happening this weekend. We also have, not to mention the Shangri-La dialogue all happening in Singapore as well. We got plenty more ahead. This is Bloomberg. All right, we are looking under the hood in this China PMI data and what maybe led to that drop and sudden drop when it comes to the manufacturing side of things. 49.5, of course, is what the actual numbers came through. We were expecting another month of expansion, and here we have it. We are seeing maybe some signs of disappointment now that things are not sustainable. What led to that? Possibly look at things like output. That was still in expansion, but still slowing from the previous month of 50.8. New orders, there you go, of a contraction of 49.6. That includes also raw material inventories, which did see contraction. Employment also stayed around that 48 level as well. And delivery time seems to be lower as well, Steve. So certainly all across the board, it didn't look like it was a good set of data.
No, but one area, steel industry PMI.
Okay.
Actually, still below 50, but we were talking 44, 46, 47 for months after month after month. Right now, 49.8, and output above 50. New orders right about the same area. New export orders rising, or no, actually contracting a bit, but still above 50. So steel industry getting a little bit of a bump on the push overall for the industrial base, and perhaps maybe some of the stabilization in the property sector is helping a little bit, but still a depressed PMI in steel.
Yeah, and maybe that's why you have seen a bit of weakness in these equity markets of late, right? Because we're still not quite seeing that sort of reflation play out despite the policy measures that we've seen from the government. But you take a look at what we've been seeing in terms of the month-end superlatives. Certainly what we've been seeing this is in the equity markets. I mean, the Nikkei is down for a second straight month. The S&P has been down for the first week in 5 or so. But MSCI China has been rising for about 4 straight months now. India continues to be a stellar story, right? We're up 7 straight months, and you continue to see those record highs in the U.S., whether it's the NASDAQ, S&P, the FTSE as well. Interestingly enough, when you see stocks and gold rising together, what does that tell you, right? And gold also hit a record in May as well. So certainly there is that still sort of defense sort of system aspect of this. Bonds, though, not exactly showing that it is that diversifier of late. Maybe gold has replaced that in some ways. Take a look when it comes to these markets as well. We're watching very closely the EV space, so that certainly is what might be driving this HS Tech higher here today. NIO's up 11% now, so Tesla preparing to register full self-driving software with China. That's according to Reuters, and that really helped lift Tesla's stock overnight, and it's lifting the sector overall, maybe some parts of the supply chain here, battery makers, the like. And there's this interesting company too, Steve, Akeso. I've been looking at. So the jumping in Japan, it was up as much as 88%. We're back down to now 33%, but that's still quite a sizable jump there, issuing positive results for its cancer drug as well. What else are you watching here now?
Yeah, I mean, again, I'm digging deeper into those EV numbers and just how the rising tide might be lifting all boats with the FSD potentially being registered. That's full self-driving by Tesla. And again, there are a lot of part suppliers into the EV supply chain going on there, even though BYD now is, the dominant player in EVs, but others are trying to gain supremacy.
All right, Monica Hsiao joining us next in the next hour. Just keep it here.
This was a disgrace. This was a rigged trial by a conflicted judge who was corrupt. It's a rigged trial, a disgrace. They wouldn't give us a venue change. We were at 5% or 6% in this district, in this area. This was a rigged, disgraceful trial. But the real verdict is going to be November 5th by the people.
While this defendant may be unlike any other in American history, we arrived at this trial and ultimately today at this verdict in the same manner as every other case that comes through the courtroom doors, by following the facts and the law and doing so without fear or favor.
That was Donald Trump there, as well as Manhattan District Attorney Alvin Bragg, reacting to the former president's conviction on all 34 charges he faced over hush money payments to porn star Stormy Daniels. And what a day it really has been when it comes to this Trump trial. Let's get more now from Bloomberg's Derek Walbeck, who's been tracking all this for us here in Asia. And Derek, we talk about 34 convictions that we're talking about. This is a former president that now is basically a convicted felon. I mean, what's next, do you think, when it comes to this presidential race? And does it really have any impact?
Well, yeah, there's a lot to unpack here. It's a historic day. If you think about it, just sort of step back a little bit. This is the first time that a former president has been put on trial. It's the first time that a former president has been convicted of anything. And Donald Trump, as you rightly noted, is running for president again. So everything sort of comes into this idea of the defendant, as Bragg noted, is not a normal defendant. He is running to be the leader of the free world again, and if polls are to be believed, has at worst a coin flip's chance of that happening. Now, we have a couple weeks wait until there is a sentencing in this case. There is no precedent for a former U.S. president going to prison, but there have been some conversations with the Secret Service about the logistics of how anything may or may not work. We have not had a major party presidential candidate try and run for president in these circumstances at all. It's not to say it can't happen. Nothing necessarily disqualifies Trump from running for president. He's still going to be on all of the ballots. He's still got a real chance of being elected. And if you look across a lot of the Republican Party sentiment right now, I think you're finding almost unanimity. I couldn't find an example of a major elected Republican who is suggesting anything other than they're in Trump's camp right now. You look at, Mitch McConnell, who is the leader of what I guess would be considered the rest of the establishment wing, who said that the charges shouldn't have been brought in the first place. So Trump has a full consolidation over the party at this moment and their full support going forward.
Well, Derek, I mean, clearly the MAGA camp will stick to their man, Donald Trump. But again, those swing states are going to call the election really on November 5th, whether it's Pennsylvania, Michigan, Wisconsin, Arizona, Nevada, one of the Carolinas, and Georgia, obviously. Does this move the dial on those undecided or those swing voters?
In all of these circumstances, I would say on a macro level, probably not. You're going to have some increasing intensity probably from Trump supporters. Maybe some people who are who are inclined to vote for him may come out that who wouldn't have come out. You may see a little bit of bleed off among some independents. It's hard to see that right now. We don't really know. But I go back in my mind to something. Jess McIntosh, a former campaign leader for Al Franken's Senate campaign, when he won by just a couple votes in a Minnesota Senate race, I asked her afterwards, sort of what made the difference and what didn't make the difference. And she said, Derek, in a race that close, everything makes a difference. Everything could be the deciding thing. And I think that Jess's point was quite right. And I would say that as you look across this, the U.S. election is not a national contest. I mean, it is and it isn't. It really is a collection of state contests. And if you look at some of these swing states, your Wisconsins, your Michigans, your Pennsylvanias, places by which if Trump wins, he's probably got it. If you're in a contest of a couple thousand votes, any little thing really could tip the balance. So I do think on a massive level, do I expect a 5-10 point swing in the national polls? I really don't. But if I'm talking about these little bitty margins in some of these critical swing states, anything could be a major difference in those places. Already you've seen Trump's fundraising looks like that is in check. It looks like that's not going away based on this. We've even seen some people come out and suggest that they made donations specifically because of this. How does the sentencing affect all of this? Hard to see. I think we're all expecting an appeal in this case. I think that's been clear since well before the verdict was even issued. So we've got that to look forward to. And look, this is going to be a campaign unlike any other. This is going to be a campaign with global ramifications that are going to turn on the littlest bitty things and that are headed right now, all polls suggest, towards that coin flip of an election. So the next several months are going to be a buckle up sort of ordeal as we go through this with consequences across all market classes because, as I say, this is the election for the leader of the free world.
All right, Derek Wellbank, thank you. Something about what's going to happen the next few weeks or months or so after this Trump trial, of course. We talked about sentencing. You have the Republican convention that happens right afterwards as well. In terms of markets, certainly we're checking this rally that's been going on here in Greater China and really kind of swaying, just pushing aside this bad PMI data that we got in the last couple of minutes or so. And you're seeing what's really been driving this. Well, it's the tech side of things is what's really reigniting once again. So after we talked about we were close to correction territory when it comes to the tech space, also the property space, which were the key sort of beneficiaries of this rally. Seems like things are picking up once again. You take a look at the likes of Kuaishou Tech, JD.com. Those are the leaders on the board here. Tencent, all of which are gaining quite sizably here today. Asia ex-China is doing this here for the rest. Obviously we're tracking what's been going on with the PCE inflation that's going to come out in the U.S. on Friday. We're expecting a slowdown in prices, so that potentially is why we're seeing this bond rally continue here today as well. When you take a look at that U.S. GDP print that was revised lower, that certainly helped lift bonds higher and yields lower. We're seeing that in the Aussie 10-year yield here today, and that's really helping to lift equity markets, although we're off some of the highs in some markets like the Nikkei as well here this morning. But U.S. futures are still in negative territory, and we're watching very closely dollar-yen still. We're hovering on those 156 levels of late. Let's talk a little bit more about China. And we talked about the PMI data, Steve. A bit of a disappointment, right? I mean, these were the two sort of, the one area where China has been really reliant in terms of growth. And we're seeing now, after 2 straight months of expansion, contraction.
Absolutely. I mean, with property being such the big drag right now, continually, despite all the policy moves, and the consumer really not coming to the fore yet to soak up some of that excess manufacturing capacity, with export markets very uncertain, obviously, with the tariffs and all that, manufacturing and the industrial base was a strength in the last couple of months. Now it's turned into contraction, surprisingly. So that is something to watch. Yep.
And we were showing this chart. I mean, obviously, there's been a lot of optimism around these stimulus measures, particularly when it comes to the property space, right? Even this week, it was, talking about lower down payment requirements for even cities like Shanghai, Shenzhen, and the like here. So Tier 1 is certainly seeing those curbs being loosened as well. And this is why you're seeing perhaps China high yield bonds have been soaring. We're basically seeing these dollar notes rising to the highest since 2021. Let's bring in Monica Hsiao, founder and CIO at credit asset manager Triada Capital, to talk us through Obviously, there's still some disappointment in the data, but what do you make of some of the stimulus measures we've heard of the property sector of late?
So actually, despite the moves from the very lows, and so keep in mind, although there's been a huge rebound in delta from the very lows, we have still, to date, since 2021, lost a huge amount of value in China high yield. I mean, overall, on average, we've wiped out the last 10 years of gains in the bonds. So it's a small win, but I would say that the measures may, and I say may, put us at least we are at a place where we've drawn a line in the sand as the worst is behind us. But actual on the ground is yet to be seen, and the measures themselves were seen to be disappointing, actually. The re-lending program that is going to be put in place under PBOC is allowing up to about 500 billion renminbi of purchases, but the reality is that this problem is into the trillions. I mean, what's required is between 1 to 5 trillion are the various estimates. So this is resolving potentially at best, just under 2% of the stagnant inventory.
So you said a line in the sand. Unfortunately, lines in the sand have a way of moving, right? So we still don't know. It's not a floor necessarily. So you talked about, obviously, the buying up of this excess inventory. That does help developers to a certain degree, puts the onus on state banks and also SOEs to kind of come up with it. We had this big Vanke loan that to the tune of $7 billion. So that helps the developers, select developers. But what about the demand side? I mean, they've relaxed the home buying restrictions in the top tier 1 cities, except Beijing, in this week. Does that improve the demand scenario, or are people still wanting to wait?
Well, to be fair, we have seen volumes in secondary home pick up, but I think that it's really about what is enough, because the problem got so deep, and every year of the last 3 years we were waiting, that drag has meant that this problem has built up to kind of become, it became a spiral enough that they had to acknowledge. On the demand side, the reality is you can look at Japan as an example. You can put mortgage rates, down. Well, it's going to go down to low 3%, so that's relatively low, and you reduce the home purchase restrictions and all of that. But at the end of the day, the demand side has to come from confidence from the households and their income, and then that goes down to jobs, which is why you see that Xi has come out himself. President Xi has come out to emphasize a priority on employment.
You mentioned about we're starting to see signs of maybe some of these developers are getting more access to the onshore funding and the onshore market. Is that going to be enough to lift sentiment, or do we need to see more in terms of getting more access to the dollar market first?
I mean, it's certainly better than the worst case, and I think that Vanke, but also we saw Season Futureland get access to some private debt. So all of this means that these few, and I'm talking about a handful of few that I can count on one hand, survivors can stay current, and that's good. But keep in mind we also had Agile, who recently defaulted, and we have Road King that is about to do restructuring. So,
but they were also talking about potentially widening this whitelist. Doesn't that just add to the risk, or is that signaling that they're willing to maybe help? I'm not saying bail out, but help more developers than just those core that you just mentioned.
Definitely, I think that they are very willing to help those that are the developers that have more exposure, more footprint, those that could create more systemic risk by sentiment as well. However, I think there's a clear division between those that are haves and the have-nots. Have-nots meaning the ones that have already fallen into deep distress, have restructured. Those guys may be facing a second round on their restructured bonds. That still may happen. And so, the story isn't over, but, I think that the distressed developers, keep in mind that a huge group of our bonds still today, after the rebound, are trading at below 10, below 12.
Yeah.
So those guys, it will be difficult still. Access to funding is definitely one thing that everybody's watching. It will lift sentiment overall. As I said before on this show too, I think the way to go, and you would be making more focus on equity side than the bond side. And so, this is a start. I would say I have some cautious optimism that the worst is behind us.
So are you adding exposure at all in the credit space in China?
I'm still, in China, we've always been exposed on the investment grade side.
Yeah.
On the high yield side, there are select non-property that we are willing to be in. But on the property side, I would say it's still a trade. And I think we need to get to the point where there's enough confidence that it's not just a trade or a momentum, but rather real investment.
What about CGBs? I mean, we had these ultra-long bonds that were issued. It's caused a lot of retail demand. Are we likely to see yields take lower, and do you think yields are too low right now?
Well, yields historically will tick to kind of policy rates, and so eventually I do think that they're going to have to lower rates again. And so I don't think that all of the gains are done as far as yields, but you will have some volatility, especially as you see currency moving.
All right, Monica, hold that thought. We'll have more from Monica Hsiao there from Triada Capital. She's staying with us. I just want to give you an update on the weather situation here on this Friday. Probably not what you want to hear just leading into this new weekend. So Hong Kong to issue the strong wind signal number 3, so Typhoon 3, between 4 to 6 p.m. here tonight, just when you're about to start happy hour. Man,
the weekend.
Steve, come on.
Gets wet again.
Plenty more ahead. This is Bloomberg.
Looking at this broader context, the behavior of the economy over the past year provides ample evidence that monetary policy is restrictive in a way that helps achieve our goals. We're seeing clear and consistent signs that the imbalances between supply and demand in the economy are receding, and we've seen a broad-based decline in inflation. Balance over time and the disinflation that's taking place in other economies, reducing inflationary pressures on the U.S., I expect inflation to resume moderating in the second half of this year.
That was a New York Fed President John Williams there. And of course, it's been interesting, his commentary was a little bit more dovish than what we've heard from some Fed speakers of late, which have been calling for higher for longer. He still thinks maybe we could see this disinflation in the second half. And maybe the Fed could still cut rates even before the inflation hits that 2% target as well. We're back with Monica Hsiao, founder and CIO at Triada Capital. There's been so much volatility in these bond markets, especially when it comes to treasuries. Are we still likely to see rate cuts this year?
So I've maintained that we will start cuts this year. I know that the market traded against that view for a while last week. I still think that it is possible for us to start cuts this year, maybe with one, possibly two, depending on how data shows ahead, of course. But one of the key things that I feel that we should focus on a little bit more with respect to the U.S. economy slowdown is to pay attention to kind of fiscal spending, because that has been a huge factor upholding, the GDP, contributing, probably 1 to 2% potentially from the expansion last year into this quarter. But if you look at the first quarter of this year, the industrial expansion is already slowing down. And so I feel that there usually is at that lag effect from that. So definitely we're seeing the impetus from fiscal spending slowing down.
So the pace of disinflation, there's many more factors, obviously, that will go into the potential cut, but you think there could be potentially two. So we're talking September towards the the later part of the year, as that lag effect really does come into the data?
Yeah, my base case is one cut starting, and I'm not really in the camp of one and done, so it'll probably be somewhere in the fourth quarter leading into 25. Yeah, I mean, there's so many factors. I wouldn't say that I have like a very high conviction to put on a trade today, given where rates are today on a curve trade. But if I had to, bet for going into next year, I think rates will eventually normalize. So the steepeners haven't worked out for a lot of traders, but I think we will get some normalization into next year, especially as my own view is that whoever wins the election, we probably will have higher deficit ahead. Normally everybody trades from the demand side for treasury curves, but eventually there will be question marks around the supply side feeding into sentiment.
And is that going to keep rates, or at least yields, pretty elevated for some time? I mean, when do you see actually buyer demand come through, at what levels?
Well, it's a complicated question because there's a whole curve, and so usually we will speak in reference to T10 or maybe, the front end of a cutting. But for T10, I expect that for now, at least my own view is that, we stay in range between sort of 4.45 and 4.65 is probably the current range. Now, this, can shift on a dime. As you know, we always can get surprises, and we saw the revisions last night. That was a bit of a surprise. I think that, interestingly, we see intraday vol, and when I see tick by tick on Bloomberg charts, it looks like it's very volatile. But overall, if you look at the options market, volatility is actually relatively low for Treasury. So I think that we will be more range bound. The curve, I still think will normalize, but for now, there's a lot ahead going into elections. And in, both Biden and Trump, I don't think we have heard very clear policies to give us a view towards that. But, I think we can all expect that there will be more broad-based tariffs under Trump.
And what does it mean for credit strategies? Do you focus on the U.S. or do you look elsewhere now?
No, we are focused also on the U.S. for many reasons. I mean, first, we are globalizing our portfolio. And second, to be fair, Asia credit, there are all these factors as to why I still think Asia credit spreads will hold in range, but mostly because of technicals. The reality is that we are trading as though it's a developed market already in IG. So we look at U.S. not only for relative value, but mostly, the whole globe is sort of intertwined, and it matters to us on relative value.
Okay. Monica, thank you. Monica Hsiao there, founder and CIO at Triada Capital, joining us. We got plenty more ahead. This is Bloomberg. All right, we're checking markets here today, and we're continuing to watch what's going on in the EV sector. Of course, the Tesla news, or at least the reports from Reuters that they plan to register for the FSD software in China. That's really lifting the EV space here, continuing here today, and really lifting HS Tech, right? Dongfeng Motor also talking about that buyback here today. And we are continuing to see the Hang Seng do quite well and outperform the rest of the region. Auto Street's IPO. There you go. We talked about this trading debut in Hong Kong. They talk about unused vehicles, services, and the like here. We saw a pop in the shares of 46%, so still looking pretty good. And we were talking about overall, it was 400 or so times subscribed. And we're looking again, a very interesting stock here, Steve. I don't know, for me, it's a fascinating story. So we're looking at SK Assets, or SK Inc. in particular. This is, of course, a conglomerate. Part of that whole conglomerate is the SK Hynix, of course, and other businesses. But the chair is getting a divorce.
Yeah.
And it's a pretty expensive one. They're talking about a settlement that could be about $1 billion US dollars we're talking about.
And he's worth $2.3 billion.
Yeah, so basically half of his worth. Che Tai Wan we're talking about. And counterintuitive. I don't know why. The stock has gone up on this because there's a speculation out there he's going to have to boost the share price just to pay for alimony.
Yeah, it's a convoluted story, but it has the nation, wrapped to their news feeds because the wife is the daughter of the former president.
Oh, yes.
Yeah, so there's political intrigue as well.
Plenty more ahead. This is Bloomberg. Blue skies in Tokyo here this morning. It's 11:29 a.m. and they are heading into that lunch break here, of course. You take a look at the Nikkei 225. We're still seeing some decent gains, but we pared back quite a bit in the last few minutes or so. Obviously, that Tokyo CPI print, we did see inflation pick up, core inflation in particular. So there's a lot of speculation now. Maybe that rate hike from the BOJ is still on the table right now. We're seeing some strength into the yen as well. So we're back to around 156 levels. Obviously, the dollar drop overnight is helping that trade here this morning. And we're not doing a whole lot when it comes to JGBs this morning. But in terms of the Asia dashboard and what we're looking at for the rest of the region here, it looks to be still a pretty happy Friday. Hong Kong seems to be driving that charge here today. We're still slightly up in the regional gauge here. U.S. futures, though, are still slightly in the red here. But overall, we're seeing most sectors are in the green, except for the likes of infotech, the real estate sector in particular here. But certainly, there has been a lot of talk about what's been going on after 2 weeks of basically consolidation in this Hong Kong market. All of a sudden, we're coming back when it comes to the tech space, as well as offshore markets here in China. But yeah, and that's despite this, Steve, what we saw, which was a pretty bad set of data for PMI.
You know, it lost momentum pretty quickly. We were expecting stability, not necessarily falling back into contraction territory after we did see the number go above 50 for the first time, for 2 months in a row after 10 out of 11 months of contraction. So it didn't last very long. And that's why I'm going to be pointing towards Monday, the Caixin China manufacturing PMI, which kind of reflects more of the private sector and smaller to medium-sized enterprises, see if that's going to also go below.
Yeah, and we heard from Credit Agricole's chief China economist earlier, Hsiao, reacting to those numbers and why she was a bit disappointed by it. Take a listen.
It is quite disappointing. I think definitely is to the very low end of the forecast string. I think it does pose the question whether, the continued improvement in terms of the China sentiment, whether it's going to be sustained. I think after the initial very significant equity market rally that we have seen in the past months, people need to see more of the data evidence, whether, China's macro fundamentals are indeed turning around, and the PMI definitely is not that helping.
Let's bring in our Bloomberg economist, Eric Ju. He's with us now. Eric, we've known this recovery has been very much manufacturing driven. Is that now vulnerable?
I think the data show that it's still vulnerable, right? But hopefully, it can be a temporary blip. You can blame for holiday disruption from early May, but we're not sure, right? We need to also look at this month's activity data to confirm whether it's really a blip, a seasonal blip, or it's more than that. Yeah.
Do we need more policy support, or is it a matter of policy implementation right now?
I think you have seen, right, China step up the policies, the property market support early this month. It's probably reflecting, they already know this month's data doesn't look that good, so we need to step up more policy support. But we're still in the process of, seeing more policy impact probably in coming months.
Well, we know about those fiscal stimulus measures with the property sectors you just mentioned. What about monetary easing?
I think the market expectation, we just finished a trip in Beijing. I think the market expectation is now not very high for the interest rate in the near term, especially due to, the pressure on yuan, and no one expected PBOC to move before the Fed. But probably even the ECB, right, expecting in June. So we need to watch what's ECB's move next month, and it might be a window. If ECB moves first, then PBOC would follow. But probably the bigger player is still the Fed. And the PBOC.
Bloomberg Economics, Eric Ju, thanks so much for joining us. Okay, here are some of the other top corporate stories we are following. TikTok is pushing back at a Reuters report that says the social media platform is working on a clone of the app's recommendation algorithm for U.S. users. The article says the end result may be a version that operates independently of Chinese parent ByteDance. Now, in March, the U.S. Congress passed a bill requiring a sale or ban of TikTok's U.S. operations, calling the report misleading. TikTok says the divestiture required by Washington is not commercially nor legally possible. Now, Apple is said to be planning to overhaul its Siri virtual assistant with more advanced artificial intelligence. Sources saying the new system will allow Siri to take command of all the features within the apps for the first time, with a revamp using large language models. Apple is set to unveil its AI strategy next month at its developers conference. And Bloomberg sources say developer China Vanke is in advanced talks with major banks for a $6.9 billion, that's US dollar loan. We're told discussions led by ICBC started a few months ago after financial regulators instructed lenders to offer funding support to Vanke. If signed, it would be the largest bank loan issued in the Asia Pacific outside Japan since 2022. And a sudden storm in the Chinese capital leaves some high-rise workers left dangling in midair.
Ooh.
Yikes.
I thought those were acrobats.
My gosh, where is that? That looks like it's at the CCTV tower.
It is.
In Beijing. Oh, my
goodness.
The Big Shorts having some problems there. CCTV tower in Chaoyang district. All right, we'll be right back. This is Bloomberg.
Well, the new CEO of top Japanese oil refiner Eneos says he wants to take initiatives to improve diversity within the company. Tomohide Miyata also spoke to us exclusively about the company's future amid continued weakness in the yen.
The weak yen has positive effects on our earnings. However, if the volatility is too large, it will impact the earnings and affect actual operations, which is not a good thing. Also, we get materials from overseas. The yen's depreciation has a certain effect in this area.
The 200 billion share buyback announced earlier this month was well received by the market. What priority do you place on improving capital efficiency? Is there a possibility of further share buybacks if profits are better than expected?
In terms of capital efficiency, since last year, we have been presenting a certain vision for both ROE and ROIC. We have been working on better returns for a long time and have decided to increase priority further with a buyback of 200 billion yen. As we would like our shareholders to continue supporting us, we want to respond to them as much as possible. And of course, we will continue to discuss further steps.
The midterm plan set a goal of increasing the number of female managers from current 58 to more than 100. This is hardly an ambitious target. What initiatives will be taken to improve the situation? Is there a risk that sexual misconduct by the executives in recent years will delay the achievement of the target?
As of April 1st, we made some personnel changes. The president of Eneos Power, one of our major operating companies, is now a woman, as is the chief human resources officer. We also decided to appoint 4 other women at the managerial level, including at the head office. In Japan, there has never been a female refinery manager. The director of Kashima Petroleum's Kashima Refinery is now a woman, and I expect that she will lead the way in diversity in the future. I think we need to focus more on training and development, regardless of whether people are male or female. I myself would like to make a bigger push in diversity, which is very important. In the future, we need to change our company, especially as we're talking about carbon neutrality. We are also talking about ROE in the context of our desire to take another step forward in the global arena. Without diversity, I don't see a future for this company.
The use of hydrogen is not expanding as fast as expected. What are the issues? In April, Eneos raised the price of hydrogen by 550 yen to 2,200 yen per kilogram. At this price, the fuel cost of fuel cell vehicles will be higher than that of hybrid vehicles. Has Eneos already given up on the idea of promoting hydrogen?
Basically, we started building hydrogen stations in 2014. We were thinking they will focus on heavy-duty trucks and buses. The situation is different in Europe. The CO2 price is totally different within their regulations. I spoke with the CEO of Air Liquide in Paris, and he told me they have 1,000 cabs there, which are Toyota's hydrogen model, the Mirai. The price of gasoline and the price of hydrogen will be similar. The reason for this is that CO2 prices and other factors will all come into play. If Japan goes this way in the future, carbon pricing will bring a little more green and blue energy into the country. I believe that hydrogen will naturally be a part of that. We would like to promote the overseas supply chain and local production for local hydrogen consumption in the future. So there is no talk of Eneos pushing back on hydrogen.
Eneo CEO Tomohide Miyata there speaking exclusively with Bloomberg's Shujoishi Inajima. And certainly we're going to continue and beef up our coverage of Japan and companies and markets there. Yeah, we got a new show coming up, Steve. The Asia Trade. They just said goodbye to Daybreak Asia, which I'm quite sad about. I was part of that show for some time. But yes, it's new and improved. Asia Trade. And Sherry is moving from New York all the way to Tokyo.
Back to Japan. She worked in Japan in the early days and, of course, has experience in South Korea as well. But, yeah, she gives North Asia some extra gravitas from her experience.
Yep, and you'll see it's a brand new studio in our Tokyo offices. It's been beautiful just seeing that been set up. Of course, Heidi Stroud-Watts is still going to be covering Australia and the like and based in Sydney, of course. But yeah, that's going to be starting Monday, 7 a.m. Hong Kong time, 8 a.m. if you're joining out of Tokyo.
U.S. officials are slowing the issuing of licenses to chip makers such as NVIDIA and AMD for large-scale AI accelerator shipments to the Middle East. This comes as officials conduct a national security review of AI development in the region. Sources say they're particularly focused on high-volume sales, and it's not known how long the review could take. President Biden, meanwhile, will allow Ukraine to launch U.S.-provided weapons against military targets near the border of Kharkiv to resist a Russian advance. But a top U.S. official says Kiev is still not allowed to carry out long-range attacks inside Russia using American weapons. President Biden had earlier opposed calls to use U.S. weapons in retaliatory strikes inside Russian territory. And bankers in Hong Kong have been looking for new ways to generate fees as big M&As and IPOs dry up. The latest rush is into the convertible bonds, and I believe...
Yeah, we've seen a lot of it when it came to the tech sector, right? Let's bring in Bloomberg's Emmanuel Belgori with that story. I mean, if one door closes, we have something that's opening up here right now. But are we likely to see a flurry of this?
Definitely, Yvonne. It's kept us quite busy, Steve, Yvonne, the last couple of weeks chasing these convertible bonds. And as you said, I mean, bankers, ourselves, everybody got to keep busy somewhat. And it's been very, very muted for M&A and IPOs, as we know, for the last couple of years. So.
What does it mean, really, for the fee wallet, then, for these bankers who have had a hard time because there's not been a lot of underwriting business with those IPOs, and there's a lot of bankers watching our show right now. They want to know, it's not nearly as much as that kind of services before.
Yeah, Stephen, I mean, it definitely helps. Let's put it that way. Everything counts. I mean, in terms of fees, and the fee wallet is not as much as what you would expect from M&A advisory or from an IPO, but it definitely helps banks. We've been, in our report in the last couple of weeks, talking to a few of the people who've been orchestrating these transactions, these convertible bonds, and let me tell you, they were quite happy that there is some sort of activity, and it's a good source of funding for the companies, particularly the big ones, because it's a low risk kind of like type of product that allows them to raise funds, particularly when the traditional equity capital markets are shut down. So it definitely helps the companies and definitely helps the bankers as well.
So are people quite optimistic about the outlook then? I mean, what does this mean for the pipeline?
Yeah, that is the big question in the horizon. I mean, I feel like we've been talking about potential bright spots for quite some time. It's always been the second half, or maybe the first half, or maybe the next second half. Well, the short answer is yes, people are feeling a little bit more optimistic. Perhaps the longest answer would be there is a lot of unknowns out there, a lot of uncertainty, a lot of volatility. So people are kind of being cautious when it comes to big deals. But definitely there is interest. Now we'll need to see how much of that interest translates into actual deals going forward.
An actual launch pad. All right. Manuel, thank you. Manuel Algori there, our deals reporter, on the latest of what Hong Kong bankers are up to these days. Of course, you can get an insider's guide to the money and people shaking up the finance hub in our new Hong Kong edition newsletter that's out every Thursday. You can sign up through the website, bloomberg.com/newspapers.
I imagine when Donald Trump and his attorneys speak today, that's exactly what they're going to say, is that they have every intention of filing an appeal immediately.
It's going to be a typical Trump news cycle in this respect. There's going to be a lot of noise. I don't think at the end it changes anything that dramatic. This is going to be competitive presidential election. It was today. It'll be tomorrow. It was yesterday.
The small dollar donors, I'm sure, will come Trump's way in the immediate aftermath. Longer term, what does this look like for those swing states and those voters we keep talking about who are going to decide the election?
Some of our guests weighing in on Trump's guilty verdicts today, and it's coincidentally that's also dominating social media discussions in China here this morning. There's a Chinese hashtag that's referring to Trump as the first former U.S. president to be convicted of a felony. That's the top trending topic on Weibo here this morning. So here are some of the few reactions that were translated from Chinese. A lot of them were actually quite critical of Trump, saying Trump was finally exposed. We will remember you. It is said that Trump's campaign donation website is already overwhelmed. Is the first guilty president about to be born? One comment slamming the U.S. political system with sarcasm, saying, quote, the American Civil War is now showing. There are some supportive comments, too, though, of Trump, Steve.
Well, I'm sure there are fans around the world in certain pockets that are in support of Donald Trump. But again, he's proposing across the board 60% tariffs on all Chinese products if he becomes the president. So, I think there's a lot of mixed opinions on the mainland about Donald Trump. Geopolitically, he might help align some of the Beijing's thoughts on Ukraine and Russia, possibly. Yeah. But at the same time, he launched those trade wars against China.
Yeah, so certainly there's a lot of chatter about what comes next for the Trump campaign. And obviously, tariffs either way is going to happen if Trump or Biden wins. I think the Chinese are in fact, getting used to that reality. Yeah,
I think China definitely is looking at that as an eventuality if Donald Trump comes in. And the Biden administration keeps on saying these are very targeted tariffs that we've done already, representing a very small portion of overall trade.
More bark than bite. At this point. Yeah,
absolutely. In areas that are not necessarily being exported to China, to the United States.
Yep. So we're looking at also that story. There's also some of these business papers talking about what's been going on when it comes to these CGBs, where bond yields have been. The front page report in the PBOC-backed Financial News says the central bank will sell bonds if demand surges further, and also says the current yield for the 10-year government bond is relatively low, at a reasonable level between 2.5% and 3%. Now, we are at, 2.3 right now. It's the second time that we've actually seen for the publication to issue guidance when it comes to where bond yields go. And state media has urged investors to refrain from some of these speculative trades and special sovereign bonds as retail investors keep piling into that market.
Yeah. Well, this rally in bonds is sort of a double-edged sword for China in its growth story. Obviously, it helps lower borrowing costs and supports the recovery. But if there's a bursting of it, then it provides some instability.
Yeah, and if you're going to have this mismatch in supply and demand, the one thing that they can do, of course, is adjust the supply, right? So maybe that's what could be coming here in the coming months as well. But yeah, certainly the retail segment has been quite interesting. The institutional side, I think there's still maybe wait and see about what these special bonds and really the demand for that as well. We're also taking a look at the Shanghai Securities News is talking up Chinese equities and praising the impact of property easing measures. It says overseas long-term funds are increasing investments in stocks. That is thanks to policy support for the real estate market. Meanwhile, Okay, this is some scary video making rounds on social media. We can't independently verify it, but there's been media outlets out there, including Shanghai Daily, said these are high-altitude maintenance workers, possibly window cleaners, left dangling from the distinctive CCTV headquarters yesterday.
Ouch.
After a sudden storm in Beijing.
Ouch. That's...
What do you do?
Or they're filming the next superhero movie. I don't know. My goodness. But it looks like the lines do go down close to the ground, at least.
Okay, and it's good to report that they did make it down safely. Oh, my goodness.
All right, high altitude and me do not mix.
No, I could never do that job. Never. Kudos to them.
Fortunately, you have a better job. No, not better. That's the wrong way. A different kind of job.
Just don't ask me to bungee jump or anything anytime soon. Okay, so there you go. Things have been, dangling here, I guess you could say, when it comes to markets. Of course, we're waiting for that inflation print, the Fed's preferred PCE inflation gauge. In terms of the month and really the performance that we've seen so far, so far it's actually been good for China, not so good for the Nikkei. We've been down for a second straight month. MSCI China offshore stocks have basically been up for 4 straight months. India, though, continues to outperform. We're up 7 straight months for that gauge, and we're still talking about record highs despite the weakness we've seen in the past week in the S&P. We're still talking about record highs for the S&P, NASDAQ, the FTSE as well, and gold also hitting a record in May.
2,344 right now.
Oh,
Look
yeah.
at that chart since February and March. It's been going up and up per ounce.
Yep, you take a look when it comes to the markets. Once again, we're checking these developers. So obviously, we talked about China Vanke and getting that big loan. Not doing too much when it comes to the stock here right now, according to our scoop there. But we are seeing the rest of the property sector at least recover here today after they did get a bit of a hit yesterday. And so that's lifting at least the real estate sector in some ways. And we talked about Hsiao. This is, of course, they did get some support, or at least with their cancer drug that did well in the trials, I believe. That's why we're seeing that stock doing quite well in Japan. We're up some 30%. GMM's looking like this here right now. We talked about just leading up to this PCE print. Bonds are a bit up, stocks are a bit up as well. There was a bit of a relief when it came to those U.S. GDP numbers that were revised lower, that things maybe, we could still include rate cuts this year in the picture. So yeah, equities are doing quite well. Dollar is seemingly getting a little bit more firmer in the Asia trade. But then again, take a look at what's been going on in commodities. Quite a lot of weakness there. We have an OPEC meeting that's happening on Sunday as well. And sovereign bond markets overall has been mixed. So the Chinese 10-year is actually up. Maybe it's against some of these comments that we're seeing with China pushing back against this rally. But really, for the most part, they are at least heading higher, bond markets, before that big inflation print. That's it for us here in the China Show. Bloomberg Markets Asia is next. Stay with us.